Welcome back to the Digital Asset Report. Global markets pulled back Thursday with equity indexes falling and digital assets following. Bitcoin pulled back to about $64,700, while Ethereum fell just below $1,900. The backdrop remained the war in the Middle East, and it took a costly turn. The Houthis claimed attacks on 2 Saudi oil tankers in the Red Sea. President Trump warned Iran would be held responsible for any repeat, saying the group acts as Iran's proxy and that major military punishment would follow if it happened again. The fighting pushed oil toward $100 a barrel on Thursday, and bond markets felt it. The 10-year Treasury yield climbed to 4.7%, its highest level since January of 2025. Rising oil raised inflation worries, and Polymarket now put the odds of a Fed rate hike this year at 71%. On the regulatory front, the Clarity Act took a big step forward, though it is still far from finished. Republicans circulated a new draft on Wednesday that for the first time includes an ethics provision limiting how presidents and other federal officials can profit from cryptocurrency. The Justice Department would enforce it with fines of up to $250,000 a day, and the restriction would sunset in 2029. President Trump signed off on the language himself, according to Republican senators. The Democrats were not sold, however. A group of key negotiators said the draft falls short and needs stronger language on ethics, consumer protection, and illicit finance. Banking trade groups piled on too, warning that the bill's stablecoin provisions put local lending at risk. Senator Cynthia Lummis, the bill's lead sponsor, pushed back on both fronts Wednesday. Speaking with Maria Bartiromo on Fox Business, she laid out how the new draft folds together the work of 4 separate Senate committees and dismissed the banking industry's warnings about lost deposits. Take a listen.
Maria, we put out language with the comprehensive bill yesterday so people could see what it looks like to have the agriculture's work, the banking committee's work, the ethics committee's work, the judiciary's committee's work, all combined into one piece of legislation. And yes, we're still challenged by the bankers' allegations that this will reduce deposits and make less money available for lending. There's actually no proof of that. As you just pointed out, deposits in banks are up since the Genius Act passed a year ago, and yet that is what they're trying to amend. They're trying to use the Clarity Act to amend the Genius Act that passed a year ago, even though there's no indication that it's going to hurt their deposits. So we're fighting against and trying to work against something there's no proof of. It's just a concern.
Wall Street weighed in too. Goldman Sachs CEO David Solomon came out in support of moving the bill forward, saying it creates a level playing field for markets to develop. That puts him at odds with JPMorgan's Jamie Dimon, who has warned the bill would give crypto firms an unfair edge over consumer banks. Senate Majority Leader John Thune still expects a floor vote in the next couple of weeks ahead of the chamber's August recess. And Bitcoin Security got new attention this week too. Michael Saylor's strategy joined other firms, including BlackRock, Fidelity, and ARK Invest, to launch a Bitcoin Security Consortium. The group pledged $15 million over 3 years, with quantum computing readiness as its first priority. Researchers estimate close to 7 million Bitcoin, worth several $100 billion, could be exposed if a powerful enough quantum computer ever broke Bitcoin's underlying cryptography, though most experts say that threat remains years away. And overseas, Kazakhstan moved to build a national crypto reserve funded directly by its Bitcoin miners. Under a new government resolution, miners get discounted power in exchange for handing over 10% of what they mine each month to a state fund, which feeds a national strategic crypto reserve managed by the central bank's investment arm. Kazakhstan is already one of the world's largest mining hubs, and the plan also includes tax breaks for crypto activity moved onto regulated local platforms. And lastly, it's a sad day for the industry as one of crypto's original exchanges is closing its doors. BitMEX, the exchange that innovated perpetual swaps back in 2014, announced it will shut down on September 23rd. The company lost ground to rivals in a wave of decentralized platforms in recent years, and both its CEO and CFO departed at the end of June. It caps an 11-year run for the platform that once handled over $1 trillion in annual volume. Today, their innovation is powering derivatives all over the world and have become a standard across trading venues. That's it for today. If you enjoyed this video, be sure to give us a like and follow along for more.